What's up, guys? Welcome back to Everyday Money. I should probably put a trigger warning on here because this one is probably going to piss a lot of people off. But I believe that the typical tax advantage retirement plan is trash. The traditional IRAs, the 401ks, the Roth IRAs, I don't think that they are really in your best interest. And so once you back yourself down off the ledge, smash that like button, and I'm going to tear each one of these apart and show you guys what I am doing instead of the traditional tax advantage savings account. So most people out there have some sort of tax advantage retirement account that they are using to save for their retirement. This could be your employer-sponsored 401k, a traditional IRA, a Roth IRA, and everyone that you've ever talked to has always told you that you need to save in these things all the time. You need to definitely be maxing out your Roth IRA. You need to be maxing out your 401k. You need to be doing all of these things. And when you ask people why you should be doing that, they'll just tell you, well, because you want to retire someday, right? And they really can't give you any good reason beyond that. It's just what everyone else is doing. It's what the financial advisors tell you that you need to do, and they don't have any explanation other than that. My biggest problem with all of these is that there is limits to how much that you can contribute to any of these, and they vary depending on if you're watching this 5 years in the future, there'll be higher limits than there are today. They are designed to make you retire when you are old, and they are designed to make you retire when you are poorer than you were when you are working. And for me, the thought of being poorer in the future than I am right now is something that I'm not really crazy about. And there'll be a lot of folks saying things like, well, you should have all your debts paid off, you should have this paid off, whatever. I don't really care if I have my debts paid off or not. I want to continue to earn more every single year, basically until I die. And so that is where I have a big disconnect with these traditional retirement accounts. And guys, the things that I'm saying today and on all of my videos are simply my opinion. I'm not a financial advisor, and I'm not recommending that you buy, sell, hold a stock, cash out your 401k, cash out your Roth, or do whatever. These are just my opinions, and it's just something to think about when you're looking at stuffing more money into these accounts. So we'll start off with the traditional IRA. This is very similar to a 401k, but you can do this without having an employer sponsorship. You can just start a traditional IRA. And the thing is that you put in pre-tax dollars, and those are able to grow tax-free until you are ready to start withdrawing them in retirement after 59 and a half. And it allows you to pull that money out, and you will be taxed at that point. The idea for this is that you will be drawing out less money than you were making when you were employed. That's how the tax benefit of this works, is because you will be paying at a lower tax bracket because you will be making less money than when you were employed. This is limited to a $6,000 contribution every year, and there are certain exceptions to all of these things as far as if you can catch up, as far as withdrawal requirements, things of that nature. But this is just a kind of a broad overlook of these, or what most people are probably going to be using them for. It also requires you to wait until you are 59 and a half years old in order to take this money out. And all of those things are reasons why I do not like the traditional IRA. I have no intention of waiting until I'm 60 years old to start enjoying the fruits of my labor. I have no intention of making less money ever in the future, and it's not like taxes are ever going to be expected to go down. So this is a retirement plan that is designed for you to retire older and poorer than you probably want to. That gets us to the 401k, which is very similar to a traditional IRA, except the limit for this is $20,500 of contributions that you can make to your 401k. All of the other things are the same. It is put in as pre-tax money. It is taxed when you take it down the road when you are over 59 and a half. And the savings is basically based on the little bit of tax that you'll be able to save throughout the time that it was growing, as far as on like your dividends and growth. But what it will do is you need to be making less money off of this than you were when you were working. And again, you have to take it when you're over 59 and a half years old, which is not a great thing as far as I'm concerned. The one thing that I will say about 401ks is a lot of time companies offer a match, and if they offer a match, take as much as you can just to get the maximum amount of the match, or else you are leaving money on the table. And even if you wanted to access this money later on in your life, you can, and you'll just have to pay income tax on it, and you'll have to pay a 10% penalty, which is another reason that I'm not crazy about any of these tax-advantaged retirement plans, because it basically leaves the government telling you what to do with your money. And if you're like me, you don't want the government to tell you what to do, pretty much in general, or tell you what to do with your money especially. The last one is the Roth IRA. And this one gets a lot of attention because you put in post-tax money and it grows tax-free, and you can take it out tax-free when you're 59 and a half. This is another one that has a $6,000 limit to it. And if you're like me, you are putting in more into the markets than $6,000 a year. You are able to withdraw any of your contributions tax-free, penalty-free. You just can't take any of the earnings out of this without paying tax on it and without paying the 10% penalty that comes with all of these if you try to take them out before you are 59 and a half years old. And that is great. That is a big benefit of this, because that money that you've put in, the contributions, you've already paid tax on that. So you should be able to take it out tax-free. But I want access to my total amount that I have. I want the access to the contributions. I want access to the returns, because I use money like this to buy things like real estate that are cash flowing assets, which we're going to get into in just a couple minutes. The biggest negative about all of these is that all of these are market investments. And you guys have seen me do a ton of videos on market investments. VTSAX, I keep a bunch of money in there. VTI, and these total stock market index accounts. And I think that those are great places to park money to allow them to grow so that you can invest them in bigger ventures that have bigger ROIs. With any market investment like this, a traditional IRA, a 401k, a Roth IRA, you are looking at single-digit net ROIs. The total U.S. stock market is making a 10% return in growth and dividends every single year. The average rate of inflation is 3 to 3.5%. And so your net ROI is going to be somewhere down to 6.5 to 7%. Now, when you look at what's going on right now with inflation at 7%, your net ROI is down to 3%. And that is going to take you a long time to double or triple your money, which is about all you're going to be able to get in your lifetime if you are in single-digit ROI type of investments, such as any of these traditional tax advantage accounts. So next, I'm going to tell you guys what I do instead of this, and this is going to be probably different than anything that you've ever heard, but this is the way I'm doing it and how I now have more money than most folks have when they retire at 37 years old. So what I do with my money that I want to park in the markets, and this is where you guys would normally park these in traditional IRAs to let them grow, I use a taxable account. And people will say, well, you're going to be paying taxes on that and it doesn't grow tax-free and et cetera, et cetera. The only taxes that I end up paying on any of this money before I withdraw any of it is any dividends that I make. And on the U.S. total stock market, there's not a lot of dividend income that I get, so my taxes that I have to pay are relatively few. It's probably, on a percentage basis, less than you all are paying for managers to manage your traditional IRA, your 401k, or your Roth IRA. The only time that I am taxed on anything is when I go and I sell a chunk of that, and even then I am only taxed on the capital gain, which is the difference between what I purchase the security at and what I sell it at. For most folks out there, you are going to be in the 15% long-term capital gains tax rate if you hold these securities for over a year. So probably at the end of the day, you're going to be paying very similar amounts of taxes, whether you have access to all of your money or just a very small portion, or maybe even none, until you are about 60 years old. What I do with that money is I invest it into real estate. I've invested in long-term rentals. I've invested into short-term rentals. Short-term rentals are making me drastically more than my long-term rentals are, and they're probably making for me right now more than most people are going to make in retirement drawing off of their traditional IRAs. And I have very, very little money into this real estate venture because I have just flipped properties up and up over time to the point where I now have $1.3 million of rentals that I only have put $23,000 of my own money into, and it's just grown over time. So putting my spare money into a taxable market account allows me access to 100% of my money at any time without anyone from the government telling me what to do about it. So I can take out all of my contributions, I can take out all of my earnings, I can make that into a real estate deal that is earning double-digit ROIs, usually high double-digit ROIs. We're talking 20, 30, 40, even 50%. That is the advantage of not having your money locked down in one of these traditional tax-advantaged retirement accounts. And it's just something to think about when you guys are looking towards retirement, towards how much you're going to have in retirement, and to when you can access that money in retirement. So guys, if you like this video, hit that thumbs up button for me. Be sure to subscribe down below for all the personal finance content I put out. If you're interested in exactly how I am doing it, you can click these links up here. They are showing you everything about my Airbnb business, investing in short-term rentals, investing in the stock market, and a taxable account. And I think it's a great place to get more information on what I have just spoken to you guys about. I appreciate you watching today, and I'll see you in the next one.